The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 22nd, wonderful Wednesday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstances that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets, what the bulls and the bears, the buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to call in. Now it's not too early, 877-927-6648, internationally 727-445-1044. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 35 points. She's trading at 17,793. The S&P is down about a point and a half, trading at 2087. NASDAQ Composite off about 5 at 4839. Russell's off a point and a half at 1152. Relatively quiet market. We've had some intraday volatility. I would expect that we're going to continue to see that. The DAX closed up 55 points. The FTSE closed up 34. Gold is trading down $1.30, trading at 1271.20. Silver is flat. Light sweet crude back 75 cents. She's trading at 49.10. Leading the chart here dollar-wise to the upside. It's Priceline up $22, 1 6/10%. Of course, we had talked about how that was going to go up and test its highs out there. We'll see if it's done that today. Churchill Downs sounds like they've got a race to the upside. You've got $9.33 to the upside, about 8%. AutoZone up $8.33. Regeneron Pharmaceuticals up about 8. That's 2%. Clearwater Paper Corp, you got to pull for the home team, up 4.5%. That's up 275. To the downside, you've got Tesla trading down $19, nearly 9%. On the discussions of buyout of Solar City out there. You've got Emergent Biosolutions. That's down 21%. That's a stinker. You got FedEx Corp down $7, 4%. Amazon's just off slightly, down $5. Adobe Systems down about $5. So we'll take a look at a number of these stocks. Where do we begin first? I think where we begin first is one of the stocks had a request come in from an emailer that I didn't get to yesterday afternoon. So I said I would go ahead and take a look at that first. Let's do that. Well, even though the Dow's off 40 points, relatively quiet markets, but we're going to get to that. But let's first take a look at ticker symbol ONVO. And the name of this company is Organovo Holdings out there. I probably got that screwed up, but that's what we're going to go with as far as the name of the company until somebody tells me otherwise. Now, excellent. Take a look at this trade here. This listener, what a this listener's got the timing the trade book out here, and got to, because if you take a look at this equity ONVO. If we take a look at a test of a swing point, here's the weekly chart out here. That's what I wanted to look at, I believe. The week of, now take a look at how this stock here went from its highs out here. So let's start off with this. The first thing that this trader investor picked out was this high volume high out here that was formed over a 2-week period of time, November 11th and November 18th, the beginning of those days for the week out there. So big high volume highs that have not been tested. So I believe that is where this trader's eyes are, which, by the way, it's a long way away, but that's up at the $13-ish dollar range out here. Now, this thing makes a beeline from $13 down to a low the week that began August 24th. No big surprise there, right? Gets down to $1.90. That is quite a haircut. But here's what this trader was paying attention to. Take a look at that swing point that formed the week of August 24th with the volume there I said on a weekly basis, 7.4 million shares. Take a look at this thing was tested and rejected with less than half the volume, 4.4 million shares versus 7.4. So not quite half, but boy, what a nice test and rejection of a swing point low out there. The prior week there was 5 million shares. The next, then that week that we talked about, January 18th, light volume. Now, as we take a look at this equity out here, it does have a sign of strength. First of all, it's trading well above its daily and its weekly TAS market profiles. So the only resistance, or its next resistance, is going to be the swing point out here on the left. Now, very likely this area is going to be tested because that was a breakout back in September 14th. 2015. So this equity seems to be headed at least for the 399-ish area. Right now it's trading out at 329. So still has more upside potential. I'm not saying that that's the end of it, right? We pointed out those high volume weekly highs out there inside of Organ Novo Holdings out here. Now, if we take a look at the daily chart for this, so congrats on the trade. Here's your nice real sign of strength inside this equity recently. This is back in the trading session of April 14th. No idea what they cured or what they do, but boy, you had 3.9 million shares trade hands that day. That says that this equity ought to have really good support at the top of that candle session, which is 298. We can see the daily market profile, which was passed about 5-6 days ago. The top of that box is 295. So you should have some really good support up in that area. Now, that does not mean that you won't run into a bumpy road ahead, because you might. Because price has been moving higher on this equity, you can see here, and doing it with less relative strength. Now, that alone is not a reversal signal. In fact, today looks relatively strong. You're looking for this to close above the June 11th area. If you can close above June 11th, still says price can move higher with less relative strength out there. That, by the way, that price point is 325, so you're above it by a penny right now. But closing above 325 goes a long way to making the bull case for you. So congratulations on that trade out there. Okay, so and if you've got a question and you don't want to call in the show, that's cool. Maybe you're at work and in one ear you're listening to the show and the other you're trying to actually do your work. You can send me an email, steve@tfnn.com. Now, let's go to the markets here. We got the Dow cooking to the downside. It was cooking to the upside earlier. So what does all this mean? Well, we're trading, or the markets are trading in a range out here. Let's go see if we can figure out what that range is. I believe that we can. If we take a look at the daily equity futures contracts out here, let's start with the Dow. Let's start with the Dow. Let's go ahead and blow this up. What we're going to find out here is that, it's just really trading in this rectangular consolidation. We talked about that a couple of days ago. The beauty of that is either a break to the upside or the downside is about, I believe it was like about a 2,000-point move. Was that about 17 to the about a 1,000-point move is what we'll call it. So this is the smaller consolidation pattern. So somewhere around 800-900 points out there inside of the Dow, if we see a break to one side or the other. Now, what the Dow did intraday, it led the markets higher out here, but it ran right into, you see on this trading session out here of June 20th, we covered this yesterday, so a couple of days ago, it actually had a nice move to the upside. We covered this in the Dow. We didn't cover it in the Dow futures. The Dow itself had a gap up on that trading session. But this thing here pushed right up into the weekly TAS profile. That level was 17,843. You didn't quite get up there today, but you're running right into roughshod. You're running right into resistance zones as it got up to a high of 17,825. Now, it'll be interesting to see where this closes. It should hold. This should be the support level, 17,702. You're trading just slightly below it right now. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on.
Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. If you're watching us on Tiger TV, we've got one of our favorite charts on the screen. That's a screen that shows that directional correlation between light sweet crude. In this case here, we use the S&P futures contract. Now, if the bottom portion of the chart is light sweet crude, earlier this morning at 6 a.m., what light sweet crude was able to do was get up and test the top of its TAS market profile daily box. It clearly was going to be a resistance zone. That price, by the way, is 50.52. The actual high that that light sweet crude hit was 50.54. You got to love that, 2 pennies. It stayed there for an hour. Because the session, well, that actually was between 5:30 and 6, and then 6 and 6:30 out there that we saw light sweet crude up at those levels. The ES Mini didn't really do much, took off for some unknown reason out here at about 10 o'clock this morning. Who knows, whatever it might have been the reason, but that only lasted for about an hour. You had price start moving higher at 10 a.m., made its high somewhere around 11. Between 11 and 11:30, and then it said, shoot, Steve's correlation chart showed light sweet crude was headed lower, so it might as well head lower as well. Now, we've got light sweet crude. It's trading down to a level of support. That level of support is where we have both a TAS weekly point of control as well as a TAS daily point of control. So this is a key area, both with regard to the markets, with regard to light sweet crude. It should hold this area, shoulda, woulda, coulda. The price point we're really looking at is about 48.75 to 48.97. Right now it's trading out at 48.89. So it's really right in that zone. I would expect that we'll see price hold in the case of light sweet crude, as well as the market. We might even see price bounce from here and the market do the same. So keep your eye. Because the ES Mini is keeping its eye on light sweet crude, and we're right now down around a support level. Got a question that came in during the breakout here from Ken in Wyoming. Ken, thanks for sending the email. Said, Steve, would like your opinion on the IBB. The IBB, that is the biotech sector inside of the NASDAQ out here. So let's go take a look at the IBB, see if we can figure out what it wants to do. Let's go switch charts out here. Let's put it up, IBB. I believe we were looking at this yesterday, noticing that it was moving down with light volume out here. So let's take a look at it, Ken, for you a number of different ways. Let's turn off some of these tools. We'll turn them back on one at a time so we know what it is that we're looking at. We'll get rid of that channel line. So here we look at the IBB. Yesterday it was moving lower, 1.3 million shares yesterday. I'm sorry. 1.8 million shares, 1.88 to be exact. Today, so far, the volume on it is 3.7 million shares. Very, very interesting. So you got some nice volume today. Now, what was yesterday? What's yesterday and today? Well, the first thing, let's take a look at the swing point that sticks out here. That's from the trading session of February 9th. That had volume of 3.5 million shares out there. And what we can see is yesterday was a test of that on 50% lighter volume, give or take, some few percentage points out there, right? So you have a test and a rejection. That's what you had yesterday. Now we can say is actually coming off of that bottom, Ken. You've got some volume movement to the upside. You don't have any price movement to the upside, but yesterday was the failure to bust through that swing point on both price and volume. Yesterday's low, 252.65. Today's low out here, 253.11. It made a new high. So with that volume, we can say it's starting to push higher with volume. We had a little slight rising price channel. Now that's a daily time frame. If we look at the weekly time frame, let's go do that for us. And the weekly time frame says what? What would you need to see this week? Instead of that 253.21, the swing point that it's contending with, so you'd like to see a close above the weekly swing point, which is going to be 257.58. You're trading slightly underneath it. So it's Wednesday. We're about midway through. Let's just double the volume, 7 million shares. Make it 14. You're testing the weekly swing point from the week that began February 8th with about the same kind of volume out there. You'd like to see it be lighter. It's not lighter, but that's what you've got. So you'd like to see a rejection, a doble gui rejection of both price and volume on both the daily and the weekly. Now, let's go back to the daily chart out here. And as we look at the daily chart, we had that just very slight little rising price channel out here. I'm going to get rid of the horizontal level from the weekly chart out there. So there's a little bit of a rising price channel out here. We can see resistance being up, probably in the 293 level. Let's take a look at our TAS profiles out here. Let's turn off those channel lines. Let's do that and see what we see. So in the case of IBB, again, I don't know if you're long, short, what you're doing here. You'd like to see any push lower, hold the price point of 250.41. That happens to be the weekly profile. So you've got a rejection on a daily base of a swing point on light volume. You've got a nice little market profile out here. Your stop would certainly have to be below the low of that swing point from, if you were going to take a long trade out here from February 9th, and that low is 240.03. If you're short, what do you do here? If you're short, what you would anticipate is that price will bounce up to the price level of 270.79. And you're at, what, 256 right now. So that, I don't know. And your ultimate bounce on this thing, if you're short, no reason for this equity, the IBB, not to get back up to its recent highs out here, that swing point. That would be in the range of 284.35. But at this stage of the game, looks like whichever side of the trade you're on, this ought to be able to bounce up to the price level of 270.79. If it takes out or moves lower out here, watch the volume as it deals with the price level of 240.03, 3.5 million shares out there. Okay, so that's the IBB. Another question that came in is if I would go take a look at the sectors. I'll assume that by sectors, the question was, will I go take a look at the sectors inside of the S&P 500? So the answer is, of course, we will. So let's go take a look. Let's take a look at the First, let's take a look at the sectors. That was the question. So let's start off with the XLK. The XLK, 3.1 million shares today so far, down with 13 cents. We've got our profiles, we've got volume, we've got everything that it takes. So the numero uno sector inside of the S&P 500 is really still above its trend line that was established back in February. So that's the trend line coming off. Looks like the February 10th, February 11th low out here. So you can see the trend is your friend, rising trend out here, has not busted through it. Finding some resistance, no question, but you would anticipate and expect small-bodied candles here with all the fear. And you got to admit, I thought I heard somebody say there was no fear in the market on Bloomberg TV or CNBC. And again, I just wanted to reach through that screen and put my arms around them and give them a hug and say, you've heard me say this before, so I'm not going to say that again. I'm going to say something else and say, what do you mean there's no fear in this marketplace? For a year, people have been afraid to buy these highs out here. There is nothing. The only thing that stops you from buying something is you believe that it might go lower. I believe that might equate more to fear than the so-called fear gauge out there. You don't see a whole lot of people running to buy the indices up at these highs out there. What do you mean there's not fear out here? In any event, with regard to the XLK, it's running into resistance levels that it needs to try to get above. The bottom of its daily box is 43.52, but otherwise I don't see a whole lot here inside the XLK. Just one sector out there. So we get back for this break. Again, send me those cards and letters, good or bad, doesn't matter. Steve at TFNN.com, or give us a call, 877-927-6648. We'll look at the other 8 sectors when we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off about 40 points. S&P is flat. NASDAQ Composite is off 5. Before we go back to the sectors, let's go take a ride on the reading up to Chicago and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you doing this afternoon?
Great, Steve. Thanks for taking my call.
Hey, my pleasure. Good to hear your voice. How's summer in Chicago?
Yeah, it's beautiful. Beautiful.
That's great.
I like it hot, so it doesn't. It's
Okay. Well,
it works
hey,
for
if you
me.
like it really hot, I guess we got to just go out west, huh? I heard.
Oh, yeah,
I heard go ahead.
I'm just paying attention here. Seems like we've had about 10 days in the 90s, which for June is pretty unusual.
Yeah, I heard. I think it was yesterday, the day before. I was driving to go work out, and I heard that there was a plane that was on its way to Phoenix from maybe it was Houston Hobby or something like that, and they had to turn around because it was too hot. That's yeah. So. No, when it's too hot, I think it was. I don't know the exact temperature, but it was pretty toasty out there. So they turned right away. They turned right around. Maybe they just took a poll on that plane. Said, who wants to actually go visit here? It's like 130 degrees outside. And everybody said, nah, let's go back home. I don't know, but. So you want to take a look at Procter and Gamble, 115. Obi-Wan says, how about that? 115 degrees.
Wow.
Pretty hot. Pretty hot, yeah.
So you were talking about highs and people having some apprehension about buying highs, and Procter's going up towards its highs here. Would you be buying?
Well, no, I wouldn't be buying right now. If we take a look at so I have the daily chart up on my screen. We've got both daily and weekly profiles. And so it's a great question. So thanks for asking. We can see that it's priced out right now at 83.55. And the top of its TAS daily profile is 83.87. Now, that profile is kind of lined up more with regard to the weekly sellers, so to speak, or is kind of a bias to that is a very strong level of resistance. So you would, if you were going to buy it, instead of paying 83.57, I'd rather you pay something above 83.87 and see a breakout and see it with volume. Now, the reason why you would consider even doing that is if we turn off our profiles out here, you can clearly see this little sideways consolidation that it has been traveling in. So you're exactly right. It's been up to this level before, and it hasn't been able to break through it. But the beauty about that, Robert, is a mere fact that the bottom of the consolidation, we'll say, is around $79. The top is around 83. So you've got a nice little 13-ish point consolidation move if it's able to break above the highs out here. And I suppose what you'd really look at is the trading day from April 6th that has 6.2 million shares out there. So the daily chart right now says, no, if you were going to buy this, you really want to buy this down around the consolidation lows around $79, or other price targets to the downside that you would consider would be somewhere between 80.95 and 81.31, assuming that it's coming back with light volume out here. So I think now is not the time to be buying Procter & Gamble. If it broke out to new highs, along with the market, then you could most certainly look at that, and you'd probably have to have your stop. So just would change your position size. I'd probably have my stop somewhere around the price level of 82.77. That's something that I would look at. So that's not that from the reward risk standpoint. So that's what I see. What are you seeing?
No, on a breakout, then you'd buy it around 83.90, something like that.
Yeah,
where would you buy it on a breakout?
I would say, well, you can do one of two things. You can, a lot of times when a stock will break from a consolidation, it breaks out, comes back, and tests the top of that consolidation. So you'd really have to see what's really going on that day. How did it break out? Did it break out with more than 6.3 million shares? If it did, it may not come back and test it. If it didn't, then it really ought to come back and, in essence, test. I would say it would test the 83.87 level. And if it holds on light volume, then you could do it that way. But buying a market when you see a market or a stock that is consolidating, such as this one, you really want to be able to buy the consolidation lows and then go ahead and stop out if it breaks through the consolidation to the downside, maybe even flip the position. Likewise, at the consolidation highs, you actually consider selling it and close out the position if it breaks out to the upside. So that's how I would read the stock pattern that's most prevalent right now.
One of the things about Procter, it seems to have done, or looking back on history, what it tends to get to 100. It tends to get to a point 120, and then most of the people don't want to own those stocks at those prices, and they split. Is there, could you put it on a longer term chart?
Yeah. Well, I can. I can put it on a quarterly chart as an example. Now, so what I show in Procter & Gamble, the high would have come out here at 93.89. So maybe they had a split. I don't know. But I show that as the high. Let me go put this back on a weekly basis because that high wasn't too long ago. That was December 22nd when it got up to 93.89. If we take a look at retracements from that high down to the low, probably in August, right? I got to grab the actual retracement ruler out here for you. But if we go from that high down to the low, this is a weekly chart we're looking at, the August 24th level. It's also right at the 0.618 retracement level. So the next floor on this, retracement-wise, to the upside would be about 87.71, which I think is a little bit shy of the consolidation levels that we took a look at. But, like I say, the buy on this is down towards the bottom of the consolidation or maybe a market profile level or a breakout if you really want to own Procter & Gamble. But I wouldn't do it right today. You don't need to. You don't need to because there's information that's about to come our way in Procter & Gamble and probably the stock market as well.
Yeah, absolutely. All right, Steve, thanks very much.
Hey, you bet. That was Robert in Chicago. What a great town that is, especially in the fall time out there. We got our great times down here in Florida too, but it's a little toasty. Not 115 degrees. The hottest. Well, the biggest swing in temperature change I ever had. Not the hottest day, but the largest. Is largest or biggest? Grammatically, somebody correct me out there. But you'll know what I'm talking about. So the largest swing in temperature that I ever had in one single day. This was when I was in the heads on bodies business. Many of you have either walked past one of the stores or purchased one of my products over the past 25 years out there. I used to be in the business where I put your face on somebody else's body, turn those into magazine covers, movie posters. You've seen them in Vegas and the theme parks and so on and so forth. And so I was looking and Mall of America was, which was owned by the Simon Group as well as the Gramasian brothers. They owned the largest mall in the world at that time, which was before the Mall of America opened, which was the Edmonton Mall. I'd never been up there, but the store was doing extremely well in Minnesota at Mall of America. And so I was looking at other Simon properties. I went to visit a Simon property down on the border town in Texas, McAllen, Texas. Talk about a true border town down there. And when I was down there, it was like about 90 degrees. And this was like in 80 to 90 degrees. This was like in the January timeframe. And the Gramasian brothers, or one of the brothers, gave me a call. And he said, "We've got 2 spots, and I need you to get up here tomorrow." I did fly up there. I'll tell you the story when I get back. But the temperature when I arrived was 40 below zero. That was a big temperature swing. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed With Taz proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the Taz Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 23. S&P is up 50 cents. I'll finish off this story here real quickly. So the largest swing in temperature, I went from it was 90 degrees to minus 40. Now I forget the Gramasian, the guy that called me. I forget his first name. Anyway, real nice chap. Called and he just implored me. We've got these two spaces that just opened up. Your stores would be perfect up here. Can you get up here tomorrow? And so I was already traveling. I was done with my work in McAllen, and I said, yeah, sure. So called my office to have when you go from Florida to McAllen, Texas, you're not wearing winter clothing, certainly not even a jacket. So, and it was a long trip, as you can imagine, because you're in one of the southernmost spots in the United States, and you're flying up to West Edmonton, so it was a long ride. To get up there. I didn't know that it was minus 40 degrees. Back then, we didn't have I might have had a brick telephone. Probably had a brick phone back then. But, you weren't getting on your brick to see what the weather forecast. I just knew that it was colder. So 40 below zero when I landed at the airport. And luckily I was able to get the Avis guy to go out to my car, scrape the windshield, get it warm so that I just had a quick run to run to the hotel. Now, the hotel that these guys put me up at is, I don't know if you've ever been up to the West Edmonton Mall. Pretty cool place. He said, "Hey, no problem. We've got a hotel right here at the mall. You don't have to get out, do anything, or what have you." So he said it'd be pretty simple. Of course, I was scared that if the car broke down, 40 below, I would have frozen to death. That would have been it. That would have been the end of it. In any event, I get to the hotel, pretty beat, pretty tired. Maybe just a few too many vodkas at that time as well, and just to keep me warm, right? And so I get to the hotel and I go to check in, and the woman says, "What theme room would you like?" And of course, what do you mean? What theme room? And I think I said, "What do you mean?" Well, if you've never, I think it's called the Fantasy Hotel or something like that. They sex. I'm sorry, shopping. Apparently, and that go along with each other out there. So I just said, "Well, what themes do you have?" And they said, I'm big into Hawaii and everything. So we got this Polynesian theme with a water bed and everything. So that'd be pretty cool. So I went up to that. It was pretty weird. The next theme room, and I said the water bed was really not a very good water bed. So I exited from that. They said, "Hey, we got a room right upstairs on the next floor." It was a Caesars inspired, a Roman type theme out there. Big round bed. It was a crazy place. Anyways, the largest swing in temperature. But I have also been, and talk about temperatures, and we'll get back to the markets. There's not much going on in the market out here. Now, the hottest place that I have ever been, because I used to have a bunch of stores in Vegas, as well as my big entree into Vegas was first getting into, what's that city on the river down there. Shoot. I'll remember it sometime during the show. But it was like if you were to go out and use the phone. Laughlin, thank you. Laughlin, Nevada. Don Laughlin is the guy that gave me my break into the casino business back in the this is back in the early 90s out here. Nobody wanted to take their casino space, and give it to some schlub that was going to create fantasy photos. In essence, that's really what it was. Putting your face on, you saw him, whether it was Schwarzenegger or was Raiders of the Lost Ark or women like the bathing suits and, some other famous actresses out there. But Don Laughlin went ahead and gave me a spot in his location. And once I got that spot, then I was able to crack open the doors to Circus Enterprises, which owned a bunch of hotels, and then onto a number of other places, and then basically owned the town with regard to that product. So it was pretty cool. But anyways, Laughlin is probably one of the hottest places on the planet that are inhabited by people. But you do have the river there. I mean, everybody is on their skidoos and their boats in the river. Okay. So enough of that. I guess we should just go back to the sectors. That was a question that was out here, was the sectors. So let's go take a look at the XLF. That is the next sector out here. Let's go see what message it has. Now, in the case of the XLF, this thing, as we can see, let's turn the profiles off because they're kind of confusing just for the moment. We'll turn them on and off. But we can see here the XLF has cracked through that rising trend line off of the February lows. Of course, we know the XLF has got that huge island bottom reversal pattern out here from February the 11th. Doesn't get more bullish than that until that gets taken out. It is a bullish looking chart. Now, the trend was broken. It was broken back here on June the 9th with about 32 million shares. Next day, 30 million shares. Now, price came all the way back down to an area where it had broken out recently. The equity, XLF, broke out, gapped up, right? So that's a breakout area for us. That's on the trading session of April 13th. 57 million shares. As price was pulling back, and this was on June 16th, tested that area, rejected that area, similar type volume, 58 million shares. So no real breakdown out here. Now is when we really got to take a look at our profiles, see where levels of support and resistance are. Resistance inside of the XLF is going to be the price point of 23.18. If price is able to move above that, 23.58 becomes its next target, then tries for the trend line. To the downside, if price breaks below 22.46, you ought to see 22.04 out there. And then you'd really have to start taking a look at volume inside of XLF. But it's probably going to need quite a bit in order to break through that swing point. Now, tomorrow could be that, no, it's Thursday. Friday could really be that day, right? This whole Brexit thing. Most charts, by the way, if I haven't said that, I know I said it yesterday, but pretty much if I'm looking for small, little, subtle signals out there, and these are charts in Europe, these are currency charts. We looked at some of them yesterday. These are charts in the U.S. Small little signals are saying that these markets are going to blast off to the upside, not to the downside. That's the message. Now, it doesn't mean that's what's going to happen. That is the way that the charts are set up right now, breaking above level. In other words, the interesting thing, as I said, there's plenty of fear of trying to buy this market up at these highs out here. No question about it. So the heck with the VIX and what it's doing out there. But certainly, you're not seeing people run to the doors to get in up at these highs out here. But as we take a look at gold, if there was a lot of fear out here, we would see should see huge movement inside of these markets. Maybe it's a head fake. Maybe this is nothing more than a extraordinary Michael Jordan head fake. And he had some of the best ones that were out there. In fact, I put a link to one in a newsletter. I think it might have been last week. One of my favorite Michael Jordan head fakes out there. It's possible. But right now, I will tell you the markets are set up to move to the upside. Maybe it's not the first move, but that's the way that they are set up. Let's take a look at the healthcare sector, the XLV. This is trading back inside its trend, right on its trend line out here. That's a trend again coming off of. So we're looking at, in essence, the top three sectors as we speak right now. We'll turn off those profiles so you can see price trading right on that trend line out here. Nothing really huge to the downside. Inside of the XLV out here, so not too shabby. Let's take a look at the XLY. The XLY is the consumer discretionary cycle. This here, just like the XLF, has broken that trend line. It tried to get back in it 2 days ago. See how it tried to move up there, ran into resistance. So that is clearly your resistance zone. There's also a little bit of a gap down with 4.8 million shares out here. That's from the trading session of June the 10th. So the key level that it needs to close above to be bullish, that's going to be 79.01. To the bearish side, you've got to bust out the lows from May 19th with about 8 million shares. Steve Rhodes with TFNN. Hope you're right.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market safe currency comeback CD. This indexed and US dollar denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Hey, during that break, I went to the website for the Edmonton Mall, and it is called the Fantasyland Hotel out here. Now, the funny thing was, when I went to the rooms, the first thing that popped up was luxury theme. And you look up here, and the right Roman luxury theme, which was really, you look at, they still got the round beds up there. But I got to tell you, the pillows were these round tubes. It was so uncomfortable. I was like, really, do you guys just have regular rooms out here? Which that is what I eventually went to. But if you hit theme, the next one that came up was that modern Polynesian theme. Now looks like they got rid of the water beds out there, so that's a good thing. The problem with a room here now, if you look on this little wall out here, you've got water that runs down it. So it's it's not really good for for man to be. It's just you're just waking up in the middle of the night going to the bathroom because of the running water out there. It's a psychological thing, I guess, or what have. Maybe it's for you women as well. But it looks like all the other themes. So I remember asking them. I had to stay the weekend. I needed to stay the weekend because if we were going to put in a store or two up there, I really needed to see what foot traffic was like outside of a weekday, which is why I throw my coat up here. So I was in Edmonton for at least 3 days, and so I got to check out the town, which was cool because the hockey team at that stage, they got ice rink in there, and so the Edmonton Oilers used to practice in the rink up there. So it was a really cool hotel. I mean, property. The hotel was an interesting place, is what I will say. But what was it? They had rooms like you were sleeping in an igloo or the back of a truck, or so they were into their theme rooms. Looks like maybe they've cut it down to 2 out there. So maybe some of you have been to the West Edmonton Mall. In any event, how are we going to finish out the markets here? What are you going to look for? We're going to look for sideways action. Let's look at gold last. There was a question that came in about gold. Here's what you should be looking for in gold. I'm going to put this on a 30-minute chart out here. We're going to put our profiles up. We're going to see what you should be looking for. You can see where price has been bouncing around. Let's turn off the daily and weekly time frames because we know we're trading below those levels. Well, the bottom of the daily box is important, 1274. But let's go turn on our 30-minute profiles. This is going to show you exactly what's going on here. So you can see that this morning, about a half an hour ago, we saw price run right up into resistance. That resistance, by the way, is priced out at 1272.70. The daily resistance, 1274.90. That is where price has to close above in order to change the tone inside of gold. Watch, because if you look at this 30-minute profile, look at the last 2 profiles out here. Let me turn off the daily here. What you're going to see is that those were set up with a bias to the upside, a bullish bias. Why? Point of control levels out here closer to the bottom of the box. Both fail. That tells you the kind of pressure inside of gold. We looked at this yesterday. This move here, this was nothing more than a large operator. This linear move right here. You don't see it that often. You certainly don't see it that often in a commodity like this. But, this was just simply let's get out, let's get out, let's get out. That's what the trading desk had. And then, boom, you finally just get rid of the unload the rest of it. That's what took place at about 7 o'clock. Watch the price point at 1264. Likely, we'll see gold bounce between 1264 and 1272. But that's your trading range out here. If you see a move below 1264, where's it headed to next? Now you got to start taking a look at retracement levels out here, I think. And if you did that, we just simply went from the low from May 31st. It's a daily chart we're looking at to the high out here on June. You're looking at 1246 as being your next level. But otherwise, expect just a range-bound market from high to low out here. But stay tuned because our friend, our favorite polar bear, David White, he's going to be up next. And then the leader of the pack, Tom O'Brien, he'll be here from 3 to 5. So have a great day, folks. We'll look forward to seeing you on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.